Hi, Shoop here, and thanks for tuning into my video today. I'm going to give you the first piece of what I call the trifecta for the stock market, because everybody's looking to 2020 and what it means for the stock market and what they can expect. So I'm going to give you the first piece of a trifecta that's going to tell you a whole lot, as long as it comes through, exactly what you can expect to play out in 2020 based on the historical analysis and with high percentage chances that this will actually play out. I'm going to give you the first piece of that today. But before I jump into what that piece is and what it really means for the stock market, I just wanted to give you a chance to scroll below, click subscribe, so that way you don't miss out on any of my weekly insights. And if you have a comment, or if you're worried about 2020 or just looking at all these different phenomenons and that people use to predict the market, just be sure to leave me a comment below. I'll be sure to take a look at it and let you know my thoughts on it, or I can feature it in an upcoming video to put my spin on it and to introduce maybe a larger topic in the weekly videos. So now we're talking about this first piece of what I consider a trifecta. And this trifecta I'm going to lay out in the coming weeks. And basically, if these three pieces come true and actually are positive for this time of the year, then we see a 90% chance that the full year, 2020, will be a positive year for the stock market. So that can be enormous information to know heading into 2020 or at the start of 2020, because the other week I talked about the election cycle in the stock market and how that typically has a slow start to the year. Basically from January to May, we don't see that much movement in stocks. And it's really from May through the end of the year, through the election, that based on this presidential election cycle, that's when we're expecting to see the rally. So today we're going to talk about the first piece of basically this trifecta that gives us a better idea of what to expect, and that's the Santa Claus rally. So the Santa Claus rally, I'm sure you've heard of it, but a lot of people kind of have a misconception about when it takes place. So basically, when you look at the Santa Claus rally, you're looking at the day after Christmas and then through the first 2 days of the new year. So that typically takes up about 6 stock market trading days, 6 trading days from the day after Christmas until the first 2 days of the year. And those days, if they're positive, that's a very bullish sign for the trifecta. But the Santa Claus rally is actually not a barometer for the stock market or a prediction tool. Instead, the Santa Claus rally is a seasonal phenomenon. And I love seasonal phenomenons. And one of my premium services, we look at all the different sectors and how we can find their seasonal trends each and every month and know exactly which ones we want to be in to generate the best profits. But today we're talking about the Santa Claus rally. And this is just a broad stock market rally that happens over those 6 days. And it's really quite amazing. When you go back to when the first Dow Jones Industrial Index was created, 1896, so we're talking over a century ago, this track record for the Santa Claus rally is that it's positive 76% of the time. And the average moves going back to since 1896 is 1.2%. Now, that price gain may not seem too impressive, but when you look at any other 6-day period in the stock market, the gain's just 0.2% or less on average. So you're really seeing this short time frame. That's an impressive move, 1.2%. And the strong track record that we've seen, about 76% of the time, that continues to go higher. That makes it this seasonal phenomenon that we want to track and that we want to look to benefit from. So it's a great time to buy before the stock market closes for Christmas and then sell after the first 2 days of the new year. And let's go back and take a look, because if you did that in 2018 through 2019, so last December and then this January 2019, and this was a time period where the stock market was almost in free-for-all. The stocks were crashing. They were in a definite crash. It was the worst Christmas Eve on record, so people were just in pure panic. But then the day after Christmas, when the market opened back up, you can see on the chart that we saw a tremendous rally that day, and it continued to fuel the rally over the next few days. So basically, the Santa Claus rally actually marked the bottom for the stock market coming out of the correction and into 2019, and launched this tremendous year that we've had so far through 2019, was all partly due to the Santa Claus rally coming in and acting as support and pushing this market higher. So this year, heading into the Santa Claus rally at the end of December, I think it's going to be another great opportunity to be bullish on stocks over that 6-day period. You can buy a short-term call option if you want to benefit from it. But if you want to continue to benefit from broader seasonal trends throughout the stock market, and to do so on a highly consistent basis every single month, then be sure to scroll below and check out a video about my premium service, Automatic Profits Alert, where we just look at seasonal trends in the sectors, and then I find the ideal stocks that you want to trade to benefit from those seasonal price patterns. So that's all for my video today. if you enjoy my videos, if you like my content, just be sure to give it a thumbs up to let me know. And if you want to get notified whenever I post a new video, just click the bell and you'll get an alert. So until next time, I'm Shoop.